Welcome to Perusing's Appraisers on Purpose podcast. Our podcast showcases inspiring appraisers and professionals from the industry who are leaders in their field. How did they get to where they are? What have they learned along the way? What can we learn from them? Your host is real estate investor, entrepreneur, and appraiser, Michael Hobbs.
Welcome to another informative, engaging, and educational episode of Perusing's Appraisers on Purpose podcast. I'm your host, Michael Hobbs, and always excited for what we get to learn and who we get to connect with and have a little share of their view of the world. And today is one of those wonderful opportunities, as we have so many times. One of our existing Perusing's alumni, generous enough to reach out and make a talented and valuable introduction. So Ed, thanks for joining us today.
Not a problem. Glad to be
Appreciate
here.
it. Yeah, man, appreciate you being here. And friends, do what only you can do. And sadly, not a majority of you yet do that, and that is just click the subscribe button. As you do that on the network, it lets them know how much you not only appreciate this, and of course we love Ed, but that helps send the messaging out. And every year, thousands more connect, thousands more learn and grow, and thousands more share. Appreciate you being part of that. And of course, you're going to love this episode. So you can definitely thumbs up on the episode as well. But Ed, we want to know, were you born this way, or how did you get into and around the real estate appraisal and valuation world?
By accident, as I feel most people in the industry got into it. But I started off as a teenager. It was supposed to be a summer job working for a lender.
No, that never happens. A summer job that turns into something more?
It turned out I was good at stuff, and as they grew, they were reasonably small at the time, but as they grew, they kept pushing me into harder and harder positions until I ended up, after several years, their head of compliance. So compliance touches nearly everything in a mortgage company, including appraisals. So, for instance, if I am fighting a buyback, there's an appraisal issue, or any number of things could be affected by appraisal. So in subsequent positions and companies, I also had risk and QC reporting up to me, which also touch appraisals consistently.
Yeah.
So, I assure you it wasn't on purpose, but it turned out I liked it.
So what was life like? Take us back to the life of a 17-year-old walking into a mortgage office back in those days. What was going on?
So really, my job at that time, this is going back a long time now. I didn't get I wasn't born with this gray hair.
But neither was I, buddy. Neither did I.
At that time, it was all bringing in mail, handing out faxes, and just doing the general grunt work that happens at a mortgage company.
Sure.
The sort of stuff that you'd hire a 17-year-old to do.
Yep.
And I was just happy because it paid more than the grocery store I was working at the time. So, but after a little while, I get bored of things very easily, which is part of why I like compliance, because it's always weird stuff going on. And I didn't like doing the grunt work that you end up doing. So I started at that time, they had binders sitting there.
Of course they did.
Yeah, no, 3-ring binders. We're not talking PDFs or anything like that.
Oh, no.
I take them home every night to read these things to understand the business. And it's the driest read you're ever going to want to, or not want to read, for that matter.
Yeah.
And that went on that way for a couple months, and then it was a matter of just happenstance. One of the more seasoned originators was talking to the owner of the company while I was making my copies. And they were trying to make a loan work, and the owner couldn't figure it out, the LO couldn't figure it out, and I turned around, I'm like, well, if you do it this way, this will work. And they both kind of look at me.
You'd actually read the manual?
Yes.
Yeah.
Yes. Because I'm a ridiculous person. I have to know how things work. I have to know why they work, and I have to know how they interlock.
Yes.
Otherwise, I obsess over it, and it's probably unhealthy, but it's been good to me. So I turn around, chime in unsolicited, and they're like, "You sure about that?" I'm like, "Yeah, it's in the guidebook about halfway through."
There's a guidebook? I'm like,
Yeah,
you opened
that
it?
sort of the conversation. So I don't know, like a week later, I get called to the boss's office, and I think I'm in trouble in some such thing. And he's like, "Hey, I wanted to tell you that loan got cleared to close today." I'm like, "Oh." He's like, do you want to try doing some other things aside from opening mail? I really appreciate your
Oh,
initiative. And
wow.
then from there, they just pushed me through harder and harder positions, as it were. So
Totally get
yeah,
it.
that's really all it was.
That's amazing. And so, did you then become a producing LO, or did you just
Oh
stay at the
yeah,
copy
actually,
machine?
running concurrently at that time.
Yeah.
I so again, I got started at 17. My birthday's in October. So
Okay.
again, so as soon as I turned 18, I had already taken the test. I'd already done the education, but I
Oh,
couldn't put the
wow.
application in until I turned 18 because that was the
Oh, I
last
see.
outstanding requirement. So
Yeah.
shortly thereafter is when I got my license, but I
Okay.
did take something really important into account. Who's going to take a financial advice from an 18-year-old? It's
That's
because
tough.
back then everything, not everything, but most things were face to face.
Yeah. Oh, that was a different world back then. Just to help people get an understanding, what decade were we talking about there, Ed?
So I got into the business in 2000. So the summer
Yeah.
of 2000.
Yep. Different world back then.
Yeah. So
Absolutely
it's
different
been a
world.
bit, but yeah. So it was one of those things. I ended up closing my first loan as a foreign national because one of my friends, a more seasoned LO at that point, he didn't want to deal with it because they were particularly hard back then. They'd become easier over the years, but back
Mm.
then they were not particularly easy to do. But they
Oh,
were
no.
British national, and
Yeah.
the pound was beaten up on the dollar two and a quarter to one. So I
Wow.
get the loan closed after bumbling through it.
Sure.
It's one of those things that you know hypothetically how it should work, but until you do it, you don't really know. And I get it done, but I realized something important during that loan that I didn't meet that borrower. So they didn't have to know how old I was.
I was just going to ask.
They had no clue. So I went around thereafter going to developers because I live in Orlando. So,
Okay.
so in and around Orlando, you have Disney, you have Universal, you have SeaWorld, and down near those, you have condos, condotels, different types
Hmm.
of rental properties that people would buy.
Yep.
And that's what this was. This was a British national
Mm.
buying a condo that they were going to use for a month out of the year for a holiday and then rent out
I
for the
see.
other 11.
Got it.
And once I realized what that was, I went and sold, hey, I know how to do foreign nationals better than anybody else out there.
That's
It,
fantastic.
kind
Yeah,
of a
because I
nerve of
actually
fools.
closed one and no one else has actually closed one.
Oh, look, when I was that young, I was more nerve than brains, but it's
A lot of it is. A lot of it is. What do they say? Fake it till you make it.
yeah. So I got very good at it until 2007 when that product dried up. 2007, 2008, somewhere in that range. So I
Hmm.
had to reinvent myself. And that whole time, I was still working on other things like selling closed loans,
Sure.
you know, closing, shipping,
Yep.
funding. Yeah, pretty much. Yeah, every stop along the way that you can do. And then I eventually made my way into head of compliance
Wow.
because
So you didn't want to stay and become one of the top 10 mortgage originators in the country?
to be clear, I still originate to this day.
Okay.
I'm licensed in 5 states still. When I was at a
Oh,
previous
wow.
employer, it was a 50-state platform, and
Oh,
I
right.
was licensed in 35 states plus DC because I
Hmm.
was their qualified individual. At a mortgage company, you have to have somebody that's responsible for the goings on in the company,
Okay.
as pertains to a regulator.
Yep.
But to that point, when somebody else is paying for the licensing,
Yep.
not a big deal. You just do the CE
Mm.
and you do it. But I don't think I ever closed a loan in South Dakota, for instance. I'm
Oh,
not.
no.
Oh, yeah. But I kept New York. I kept the Carolinas.
Ooh.
I kept Georgia and Florida because
Yeah.
what
That
happens?
makes sense.
People leave New York and they go to the Georgia, the Carolinas, and Florida.
Actually, kind of
So
goes like
yeah,
that.
I kept the licenses that pay me.
Makes
But
sense.
but yeah, so no, I never actually backed away from it. In fact, I found it made me better at doing compliance in the sense that I had a full understanding of the downstream ramifications of my decisions and how they're going to affect business, how they're going to affect the sales force. And my decisions weren't therefore being made in a vacuum. It was fully informed of what this is going to do, and it was never done arbitrarily. It wasn't,
Okay.
oh, because I feel like it.
Yeah. No, big difference there. Big difference there. Oh, oh my gosh. That is something else. So you've kept it through that period of time, but as other opportunities showed up, clearly you stayed with origination, but took on new learnings and read more three ring binders, it sounds like.
Yeah, eventually those turned into PDFs, but
Yeah.
uh, through that time, I also got 2 degrees from the University of Florida because UF actually was one of the earliest adopters of distance learning.
Really?
Yeah, that I got both my undergrad and my MBA from UF while working full time.
Oh, wow. Good for you, man. So you
But
have, huh?
it's that constant thirst for understanding and knowledge that kind of pushes that sort of stuff.
Sure.
So even things that I don't typically do, I make
Hmm.
sure I'm fully aware of how they work and why and how they fit into the ecosystem, if you will,
Yeah,
of a mortgage company and at large the mortgage industry.
that totally makes sense. Man, that's phenomenal. How did you, because you've been in this now for 2.5 decades.
Yeah, I don't like it as much when you say it that way.
I was actually giving honor to the massive amount of change you've experienced over that time. The industry has gone through some significant thrashings.
Yeah, it's the I touched on it earlier in 2008. That's what pushed me into compliance. So in 2008, when everything went sideways, my originations dropped off sharply because most of them were at that time being done as foreign nationals.
Yep.
But also, in reaction to what happened, the Dodd-Frank bill passed, which then said that every mortgage company needs to have a chief compliance officer. I was tapped because I knew how to do the fair lending math. Um, I had to figure out the rest,
Wow.
but I knew how to do the multiple regressions required to do that sort of thing. So they're like, "Congratulations, you're in charge of compliance." I'm like, "Great, I don't know what that means," but you figure it out, and you get you get at it one way or the other, or you get out the door because you're not good
Yep.
at it. I tend to learn through trial by fire, if you will.
That is, there are a number of us out there that definitely learn better that way.
Yeah, it's that incentive. I had a friend once ask me, "What if you got it wrong?" I'm like, "Oh, it's probably fired."
Well, you're
What?
not going
I'm
to
like,
die. You're not going to die. That's the important thing. And you're not, no one else is going to die in the process either. It's all
and
about possible.
I'd be much more stressed out if I was like a surgeon or something.
Oh my gosh. Yeah, like literally someone's life's on the table. Luke, this is a piece of paper and yeah, there's some money and stuff involved, but no one suddenly got a bad blood transfusion or their kidney failed.
Yeah, and that's yeah. So you can make, given what I do, you can make mistakes big enough to shut down an entire company, costing people their livelihoods. There is that, but at the same time, no, it's still it's stressful, but it's not. Nobody's going to die.
Yeah, it's a great way to put it. And so, Izzy, I'm just taking notes here on this, which is fascinating. It's why it's so valuable with our different guests. Everybody brings a little different perspective into things, some of which we know a lot about, and others which, more maybe Lloyd, yours, we know a lot less about. So you've been through that side of it. And as you said, you were more than willing to take the time to read and understand and apply what was there, maybe when others didn't. The that interesting perspective of stepping into a role that brand new nonetheless. I appreciate that you have some boldness, maybe where other people may have a little bit of trepidation. How did that go when you first stepped in?
Yeah, of course there were some mistakes, but you learn from those mistakes. As long as you're not making the same one again and again, that's fine. The thing that sticks out to me early on is I made a mistake that it was relatively minor, a couple $100, nothing that most people lose sleep over. That haunted me until I found out how it happened.
Oh, wow.
And because I hate losing probably more than I like winning. Is
That the research actually shows that. It's called loss aversion. There is a huge body of research. I think somebody might have got a Nobel Prize because of this as well, which I think it's Daniel Kahneman, if I'm not mistaken, actually talks about the pain of loss is twice as impactful or twice as intense as the same amount of gain.
at least anecdotally, I will attest to that.
Yeah.
But that makes sense to me. But yeah, so with that, that simple mistake, I tore the system apart piece by piece until I found out how it happened, and then went back and put controls in place to stop from happening again. And that's actually that's a relatively small example, but that kind of informs the way I work at large.
Yes.
When I do the type of work that I do, I approach it almost like a white hat hacker in the sense that
Oh,
if I can go through and wreck your systems, wreck what you're doing, wreck your controls, so can somebody else.
yes.
And I know it doesn't sound like it based on what I've told you, but I'm inherently
Mhm.
lazy. So if I can find a way to
Tell us more, Ed.
look, if I can find a way to automate things, automate the guardrails, automate the monitoring, automate the
Hmm.
reporting,
Yes.
if I can put something in there to where I don't have to look over your shoulder, I am really happy to do it. Because I don't want to be a hall monitor. In fact, when I got into compliance, my wife laughed really hard. She's like, "So what does this job do?" I give her a brief rundown, and she bursts out laughing. And I'm like, "What's so funny?" And she's like, "You hate rules more than anybody I've ever known, almost irrationally so." I'm like, "I know where they are, only so you can break them." it's it, but that really informs a lot of what I do. So I think I told you before we started recording,
Yeah.
a lot of what I do is on a continuum. When I talk to my clients, it's, well, tell me what you're trying to accomplish, and I'll get you there as safely as we can. But also tell me, how adverse to risk you are. There's a continuum on you are being super conservative and maybe leaving money on the table to what are you insane? You can't do that. And most companies operate somewhere in between,
Yep.
but it is indeed a continuum.
Oh my goodness. Oh my goodness. That is something else. Now you threw out a term that many of us clearly picked up on and we're in sync with you, but others may not have understood it. You said a white hat hacker. Tell us a little more about that.
So basically, it's a tech term, but a lot of what that is somebody who comes in with the intent and the permissions key uh, in tech. They're trying to break your systems. They're trying to access
Yep.
your systems. They're trying to get in any which way. And
Yep.
it's not that much different. I'm looking for a way to wreck what you're doing, to ruin it, to, if I can,
Yes.
even penetrate things that you don't want me to penetrate. And it's not a tech thought for me so much as,
Yes.
again, the entire ecosystem of what that is, because there are massive ramifications, particularly around privacy laws, if somebody accesses that sort of information. But again, I take it one step further and think of it as systems at large, not just a denial of service attack or anything like that,
Yep.
but If
Mhm.
somebody can systemically understand how you're working, they're going to understand how to game the system and leave you vulnerable to abuse.
No, I think that makes such good sense. And some people may not even recognize reference. Like, why is it a white hat hacker versus something else? And for those of us that grew up with the Cowboys, not the Dallas Cowboys, but the
Okay.
John Waynes of the world and the Clint Eastwoods, John Wayne was your good guy, the Duke. Going back literally to the movie The Cowboys, he wore that white hat. He was on the good side. Black hat was on the bad side. You look at Clint Eastwood, while his weren't exactly white, they were tan but not black. And you go back and say whether you watch him in Pale Rider or some of the other iconic films he was in, like you too, Ed, you just need a horse now and big hat.
You're gonna have to get a Clydesdale. Last time I was on a horse, the thing was probably wishing for death. I'm 6.5 feet tall and closer to 300 than 200 pounds.
You'll need a stallion, not
A
not one of those
Clydesdale like
dainty
Budweiser
horses.
commercials.
That'd be amazing. Oh my goodness. And the was it just a moral code issue for you that you stayed on the good side of the fence? There's a lot of very talented people out there doing all kinds of things, and you chose the white hat side of it as opposed to the alternative side.
So, what's funny is it probably is a moral code thing, but I'm also a fan of comic books because anything nerdy I'm a fan of.
I can appreciate that.
But I've always identified more with the anti-heroes than
Oh,
the. So when you mentioned Clint Eastwood, I always considered him more of an anti-hero than a straight up hero. John Wayne's I'm a good guy and I do good things because that's what good guys do.
yep.
Except in the Genghis Khan movie, that's something else. But which is also why I don't like your Superman characters. I do good things because I'm a good guy, and good guys do good guy things. I prefer I prefer the ambiguity, which again brings me back to compliance. Compliance, in many ways, it doesn't have black lines that you can't cross. A lot of it's shades of
Right.
gray.
Yep.
It's not because any one thing. It's these statutes are written with intent, but they can't imagine every permutation
Yeah.
thereof of what may or may not happen. So sometimes I give advice along the lines of, "Hey, this isn't out and out prohibited, but I can imagine a regulator will not like this. Because it runs afoul of the intent of the law, but it doesn't spell out that you can't do specifically that."
Mhm.
So, which goes back to how adverse to risk are you?
Got
it's,
it. Got it. Got it. No, that makes sense.
yeah.
Given that you've been in and around the mortgage industry as long as you have, obviously appraisal is a huge piece that runs concurrent with mortgage. What's been your highlights and lowlights in and around the appraisal industry, not necessarily individual appraisers?
All right. There are a couple spots where it comes up quite a bit. Certain clients, and well as in-house as well, but certain
Hmm.
clients, they hire me to fight their buybacks. So an investor
Got it.
has a problem with a loan, whether it's material misrepresentation, fraud, errors, whatever it might be, they can make the end investor can make the lender buy the loan back. So I actually enjoy those probably more than a lot of things because it's different. I tend to get bored looking at the same thing, and the fact patterns tend to be wildly different
Yes.
on on those. So it comes up there, comes up in underwriting and risk assessment. It comes up in QC, and
Yep.
going back to the buybacks, I fought for a client recently. I fought a buyback that was appraisal based, and to kind of level set on this, and unless it's picked up, this issue was missed by the underwriter, and it wasn't picked up in post closing QC by either the investor or the lender at the time. But when the loan went into default, obviously the end investor is looking for any reason to shift the risk from them
They're looking
to
for a fall guy.
the loan. Yeah,
Oh yeah.
exactly. So this had an issue with the appraiser. Specifically, the appraisal came in as believe a C3, and it had some bare floor, cracks on the side steps, missing railings, missing, I don't know what you call them, but the spokes in between
Oh,
a
the
railing and the deck.
spindles.
Spindles, yes. Among other things, but the bare floor being the most menacing, bare
Sure.
subfloor rather,
Hmm.
being the most menacing of the bunch.
Got it.
And I tore this appraisal in and out, upside down, and sideways. First thing I found was the appraiser was out of business, so I couldn't even call him to
Wow.
to
Oh,
say,
wow.
"Hey, what were you doing here?" And but in the original, and I should take a step back. The original appraiser said in there he did it can be. I'm sorry, it was a C4. It could be a C3. Sorry, it could
Okay.
be a C3
Okay.
if these five things were done, whatever the
Oh,
five things were.
okay.
So, which now makes the appraisal subject to.
Yes.
Um, so the homeowner makes all the repairs, and the appraiser goes out and does the inspection, takes the pictures presumably. So on this final appraisal, the box was checked to say that all the repairs had been done to satisfy the valuation. Great,
Okay.
but and this is where detail matters, because the end investor picked up that the picture of the subfloor was the same picture as the subfloor in the first one. Now, if I were to wager a guess, he just attached the wrong file.
Probably. We would
Yeah.
like to give the person the benefit of the doubt. They're not going to
Well,
check the box and say it's done if it's not
well,
actually
in
done.
fairness,
Especially that one.
the other four pictures did show the repairs done. So he
Oh,
clearly
yeah.
went out. So he clearly went out. He clearly
Mhm.
took the pictures. My again the because most times, and this is I'll stand behind this. I'd say probably 90-95% of the time, whatever has happened is not malicious. It's
Yeah.
carelessness or ignorance. It's usually not malice. It can be, but it's usually just carelessness. Ultimately, the fight around it, and that seems like such a silly thing, but the people who are reviewing the appraisals in house at the appraisal desks or individual underwriters or post
Hmm.
closing or pre close for that matter are looking at
Hmm.
these things to see, hey, this picture is the same picture.
Yeah.
Ultimately, I won that one, but that would have been something where I had to hit the E&O if I didn't win.
Got it.
And I don't know, thinking about it, I'm not sure any of you guys have ever made a claim on E&O so much as you've had claims made on your E&O.
Correct. That's
Yeah.
a very astute statement. I'm trying to think of, I have been with people who have made a claim to E&O or filed against for an E&O, but most of the conversations over the decades, as infrequent as they are, is like the risk that there would be a claim filed against you. Yeah, absolutely.
Yeah. It's such a silly mistake, but that
Hmm.
buybacks are expensive.
Yeah.
So not only do you have to pay all the money
Hmm.
back,
Yep.
there's all sorts of other costs associated with it.
Yep.
That being said, I was pleased when the end investor took hey, look, there's five pictures here. Four of them are the same thing, and he checked the box. He clearly went there. He clearly took a look at it.
Yeah.
He, he's out of business. I tried to get a hold of him. Your move, and the investor backed off on it. But it was something so silly probably took me the better part of 2 days to fight. It's
Yeah. I can remember one of those, to your point, where client reached out to us, and I don't remember, they were the appraisal management company. The funder was actually part of the conversation. The lender wasn't, as I recall. I think somebody from there. It was like a powwow, and it was Fannie Mae demand, and ultimately prevailed. But man, we actually kept track of our time on that, and we had somewhere between 40 and 50 hours, and that it was
80% of all businesses fail within 5 years, according to the US Census Bureau. With so many roles and responsibilities that must be managed and have nothing to do with appraisal reports, is it any surprise that it's hard to keep up? Much less having a sense of peace, stability, and profitability that comes from growing your business? Given all of this, you might already be thinking about exiting your business one day. Don't miss the limited opportunity to work with Michael, a real estate expert and professional coach. He has worked with more than 300 owners and entrepreneurs to find their highest and best use by solving problems that reach their most important goals. Compress decades of learning into days by working with Michael. Michael is famous in real estate and business coaching. With his help, you can accelerate your growth, increase your quality of life, and earn more money, all while ultimately doing less. Michael helps you not just grow your business, but also find new purpose in it and in your life. If you're ready to take control instead of being controlled, contact him on LinkedIn or email him at michaelh@paru.com.
Yeah, it's amazing how that can go.
yeah.
That's really the thing. So you mentioned with the AMCs, you'll appreciate this because another funny thing that came up, uh, only once that I'm aware of,
Okay.
that I was involved with,
Yeah.
but after the air requirements were passed, obviously AMCs are the safer, one of the safer ways of choosing your appraisals. Obviously not the only way, but or appraisers rather.
Mhm.
But I was actually the loan originator on this one.
Oh,
So
really?
yeah, so I'm very familiar with this particular one. I was doing
Yeah.
a loan in rural North Carolina, really not like an hour and a half from anything.
I was gonna say I have no idea where that is.
Yeah, so I don't, for the life of me, I can't remember the name of the town.
Yep.
But so I put through I I can't order it being the loan originator, but my team put it through the AMC like they would anything else, and they couldn't get anybody to bite, so they upped the offering, upped the offering, upped the offering until it
Yeah.
was almost 3 times what a typical appraiser would be. Still nobody would go.
Wow.
Um, ultimately what ends up happening is we find out that we can't get anybody to even go there. So we turned to Google, and I did it through email because I needed to be able to, because at this time I was also in charge of compliance.
Oh, wow. You got to really paper yourself on this one, right?
Yes. So anytime you're going to go outside of your standard policies and procedures, you have to document the hell out of it. So
Yes.
in this case, I got emails from the AMC saying, no, we can't get anybody to go there. I had the request log showing,
Yep.
hey, yeah, we offered this and this and this. And then I screenshotted the Google search and then sent emails to the top, something like 15 appraisers that show up for whatever town that was. I feel like the town was
Okay.
like named like Kingston or something.
Okay.
But it's really out of the way in North Carolina. And to that point, I I emailed each one of them, and only one would actually go there, which
Oh, you actually found one to go there.
I found one.
Wow.
And ultimately, this appraiser wasn't great, but he did go there.
Okay.
But but when it came time to sell the loan, the end purchaser, I believe this one was going to Freddie Mac,
Yep.
asked, "Hey, why aren't you using an AMC? How'd you get here?" So, incidentally,
Send
that's
you all
why
the emails.
yes, and they bought it. So a lot of times, lenders and in particular may seem like they're being nitpicky or busting your chops over silly things, but it's because of downstream ramifications.
Wow.
Knowing full well what I know, I knew to document, maybe overly document my search for an appraiser.
Yes. Yeah, that
And
makes
then-
sense.
So yeah, to that point, sometimes you have no choice but to choose an appraiser. But anytime you
that's
deviate
true.
from the norm, you have to be able to document it, which goes back to, in fact, in 2.5 weeks, I'm going to a conference where they get representatives from examiners from all 50 states. And
Oh,
you
wow.
can call and pick their brain on different things. For a guy who does what I do, that's a very helpful place. You
Oh,
get
wow, that's
friendly-
fascinating, actually.
Yeah. And the one thing that any of them will tell you is they want to see consistency.
Yeah.
Even if you're consistently wrong, but meaning to do the right thing,
Wow.
it'll be more, all right, you're doing this wrong, but at least you're consistent about it. It's when you start doing things haphazardly and without any kind of pattern or meaning that they really crack down on you. So they're actually they expect to find problems. It's
Wow.
less problematic if you find it yourself and say, hey, I noticed we were doing it wrong. I made the changes before you got here.
Yep.
Most of them will say, all right, good job. Let us know how your monitoring goes. If they catch it for you, they're going to come back shortly thereafter, probably a year or so later, and see how you're doing on the changes. And you have to demonstrate that you made the changes and that you're monitoring said changes. So to that point, a lot of it boils down to just solidly documenting everything, which is why, going back to my general statement about lenders being a nuisance, that's why they don't want to lose their license. They don't want to buy back loans.
Yeah, I get it. Anybody who carries a professional license, you want to carry your license. You don't want to lose your privileges.
Yeah. Look, I'll be the first to tell you this. Sometimes I am a nuisance when asking for things, but there's always a reason why.
Oh my gosh, that is something else. Since you've been around this since you were 17, you've literally watched the transformation of music and along the pathway. You've seen so many changes in 2.5 decades. What has been your experience of working alongside the appraisals performed by appraisers as part of what you do, and more importantly, how integral that singular document is, but how much mileage gets put on it, whether the originating writer, researcher, analyst has any idea?
Ultimately, so we'll go back to 2000. In many respects, the bad old days. At that point, I'd argue that the appraisal was the most important thing. In the respect, especially you had those no-doc loans going at the time.
Oh, those were wonderful. If you were an investor.
Yeah, so I'm not
buying the property, that is, not the investment.
I'm not gonna name names on this, but I remember a program. If you had a 760 score or better, you could get 100% financing on an investment property with no documentation. Just take you on your word that you know what you're doing. I do remember who that investor was, but I'm not putting them on blast because somehow they are still in business. Wow. But that being said, all the heavy lifting was done by the appraisal on those types of loans.
Yes.
Now, as you move forward past 2007, 2008, when the ability to repay rule was implemented on owner-occupied things, which apply to primary residences and second homes, it shifted a little bit, but still, if you ever have to take this property back,
yes,
you need it to be worth what you think it's worth, because that is the collateral. That's how you get your money back.
Absolutely.
So it's important, just differently important.
Yes.
But again, early on, I don't want to say it was the end all and be all, but it was almost outweighed, because I would argue nowadays probably the income and employment docs are more important than the appraisal.
Oh, absolutely. Because the property's always not been the primary source of repayment.
Yeah.
The source of repayment is the borrower's ability to pay.
Yeah, exactly. That seems like the sort of thing that you wouldn't have to legislate, but
Yes.
But here we are, and yeah, and at large I do believe that's a I'm going to speak out of both sides of my mouth here for a minute. I do believe that's a net positive. But I've also been quoted as saying that there's no such thing as a bad loan product, just bad execution, bad monitoring. And what made these things terrible is that they all defaulted. So they didn't have the monitoring around. They didn't have the reporting. They didn't have the data, the stats, the analytics to go back and say, hey, maybe this isn't such a good idea anyway. And if they did, some of the smaller lenders certainly didn't. Some of the bigger ones did. They just didn't want the gravy train to come to a halt, if you will.
Yeah.
So it's so I think right now back to your general question, I think it's more in equilibrium now than it had been in years past, because now I think it's right where it belongs. I just with any system, as it were, there's always room for improvement, always room for changes, tweaks here and there. But I think at large is where it belongs.
I think that's a great point. I think that's a helpful reminder. And at times people forget that message. And that is, you're not the first line of defense, fundamentally.
No.
But you definitely, you're in the line of fire.
And that's just it. I tend to think very pessimistically, what's the worst that can happen in every situation?
Yeah.
And then I'm happy when the worst doesn't happen. But I tend to prepare for the worst and hope for the best. And
yes,
that's what an appraisal is. The appraisal tells you what the worst case scenario is, barring any kind of macroeconomic impact, such as market bubbles that burst, or I don't know, going to war or natural disasters, any kind of force majeure kind of thing. Obviously, you can't predict force majeure. That's why most contracts have a force majeure clause. But aside from that, typically it tells you what you can expect out of this property. Should you have to take it back? Should you have to board it up? How long it's going to be on your books? How long am I going to have to take care of this before I can turn and burn and get and at least get most of my money back? Because that's all going to work into the pricing, the rate,
exactly.
Because what a lot of people don't understand is mortgage rates are derived from a risk-based model. The more risk something entails, the higher the rate of return the investor is going to want.
Absolutely.
You hear a lot of talk about the 10-year bond because that's as close to the risk-free rate as you can get on long-term debt like that. That being said, most pricing models go there off of that to work in, all right, so from this range to this range is risky, whether it's loan to value, which again is really important around the appraisal, especially on refis, but even so on purchases. But whether it's debt to income ratio, loan to value, there's any number of things. Right now, ITIN loans are a thing out there. That's for that's for people who are paying their taxes but aren't necessarily here legally.
Exactly.
There's a little bit more risk involved with that, given the administration's stance on these things. And I don't mean to be political about that, but that is something that you have to work into your risk modeling. Circling back to all this, there is a significant portion of that risk modeling that is based on what the property will do, because that goes to your worst case scenario.
Yeah.
But let's say borrower through no fault of their own loses their job. There's no way to predict that. It happens. Or even worse, gets hit by a bus. I promise you the borrower didn't want that.
I hope not. That's
Well,
a different thing.
maybe I can't promise you, but yes, I hope not. But there's no way to predict that. So what's the last line of defense on that? Should the worst case happen, that's that the collateral, the property that's being appraised, is worth what the appraiser says it's worth, and they being the lender can indeed recoup their losses through the sale of the property.
Yeah. So great point. Such a great point. Such a great point. And at this point, given all you've experienced and all you've the 3-ring binders that you've read through and everything else, like, what role do you fulfill in the industry? Because today, like, you sit in a unique spot that I know I wasn't necessarily aware of, and I appreciated you sharing just a little bit about what you do and why people want you to do what you do.
All right, so there are a couple different things. A lot of companies have somebody like me internally that will do what I do, but me at large, me plural, as in me or people like me, basically our job is to keep the lender's doors open, identify the risk, whether it's regulatory, political, like I mentioned with the ITIN loans. And let me throw a caveat here. This is somewhat of a curveball. Depending on the structure of the organization, in past companies, I had risk report up to me. So
okay.
Sometimes compliance reports to risk, sometimes compliance and risk report to legal. So it's at those companies, risk reported to me.
Sure.
Before I went off and started my own company.
Oh,
but to that point, it's basically monitoring to keep the doors open so you can close the loans, so everybody else can have a job. So I always took that with the utmost reverence, if you will, because it's not just me I'm playing for anymore.
absolutely.
Now it's everyone. So I mean, that if you think of it that way, that's probably the best way to describe it. The position at large is to make sure you don't get shut down by a regulator or through bad business practices, because either will kill you. But me personally, a lot of what I do is I own a consulting firm that kind of helps people get where they want to be. I have a conversation when I start talking to a new client. Tell me where you want to go, and I'll get you there as safely as possible. And that kind of dovetails with the other tenet I have is tell me what your risk tolerance looks like.
Got it.
And I think I alluded to this earlier. There is a continuum. An organization like a credit union that's 100% member owned is going to be a lot more risk adverse, because even the appearance of impropriety is severely damaging. Your members are your owners also. What happens? They pull their money, and now you're in trouble.
Yes.
On the flip side of it, and let me put a disclaimer here, I am painting with broad strokes,
of course,
on this, but on the flip side of it, you have broker shops. And
yes,
I've known some extremely responsible broker shops, but typically the flow goes, you have an extremely successful salesperson that says, I can do this on my own. And they're not operations experts. They're not compliance experts. I have a particular friend in mind that that can sell anything to anyone. After I talk to him, I want to get a loan.
I need to go buy a property. Let me just go and find one this weekend.
Exactly. Is that friend an expert in those things? No, he's not. But his staff is.
Yes.
But he didn't have the staff at the beginning. So it tends to be a lot messier when these companies first start off. And there's
I don't want to call it natural progression because there are exceptions to every statement and rule, but the kind of natural progression goes, all right, you have somebody who does enough of business to justify starting their own company. Now that they typically start as a broker and then they grow into doing some correspondent stuff. And at that spot, that's where you need to start getting things like warehouse lines and and start doing more things, because to get the warehouse lines and to close the loans, and they typically start as non-delegated. For anybody that doesn't know what that means you send the loan package to somebody else to underwrite, and then you close the loan with your money. Which is coming off of a warehouse line, which is essentially a revolving debt. Think of it as a credit card that's secured by the loans that you're closing. It's the simplest way of putting it. So you grow into doing that, and there are more requirements. Then the next step is you grow into becoming delegated, to where well, not you specifically, but your company is doing the underwriting and making the decision, closing it with their money, and then selling it. Then comes your Fannie Mae, Freddie Mac, HUD approvals. You get approved to close loans and sell directly to them, or in the case of HUD, be insured by them. And then I don't want to say your last stop, but like your last big hurdle is getting your Ginny approval. And when you do that is not easy, but and there's a reason for that. The thing about servicing is when you look at consumer complaints, I'd say about two-thirds or so of consumer complaints revolve around servicing. And consumer complaints can and will shut down companies faster than you'd expect.
Yeah, I wouldn't know that. That's amazing.
So to that point, a lot of this boils down to every step of the way there's an inflection point to where you either have to stop where you are and not move forward, or take the next step. And those next steps are perilous, especially if you haven't done it before. And that's how it works. Like a guide, if you will, guide through everything. Look, I am incredibly good at putting out fires, but I prefer to prevent them.
Okay, that's great. It's great to have people like that to be there. You got to have people there to be able to see around the corner, to have a different perspective on the very things that are going on. It makes a difference.
And at large, one of the things I tell people is, because people ask, how do you know so much stuff? We have the stuff that you and I spoke about, researching is being insatiable with knowledge. But the other half of that is, I've made a lot of mistakes. You have to.
Where does it come from? Where does knowledge come from? Like, wisdom is knowledge that you actually apply. And then taking a step back from that, taking information and using it and getting a result, hopefully a good one, but not always the case. That definitely builds knowledge. And then coming back from that, you either choose to learn along the way, or you'll have the privilege of repeating it until maybe.
And this is going to sound like I'm taking a cop out when talking about lending and what I do, but so a very common question I get from clients, and before that, different loan teams in-house, was, can I do X, Y, Z? And more often than I feel comfortable with, the answer is legally yes, but if you can't sell it, we can't sell the loan, then it doesn't matter.
That's true.
We'd better call the end investor to see how they feel about this, because they are allowed to buy things that they don't want to buy, even if it's legal. And that being said, that sounds like a cop-out, but it goes back to understanding the full ecosystem, if you will, whether it's, in your case, appraisers or anybody else for that matter.
Totally get it, man. Totally get it. So given everything you've seen and everything you've learned and the experience that you draw upon, Ed, as you look out over the next 3 to 5 years, what are you looking forward to, or what are you optimistic about?
Right now, it's a mixed bag. I always appreciate changes in market, changes in how things go. I tend to get bored very easily.
Okay.
I'm seeing some new innovative products out there. Another thing that my company gets hired for is when you want to roll out a new product or a whole new class of product, if you will,
Yep.
we can help you do that as well. And I'm seeing new and innovative products coming to market over the next 2 or 3 years that which don't exist in the United States. They exist elsewhere in the world.
Oh, really?
And I can't go into much more detail than that due to signing NDAs on such things. But
Do not violate the agreements that you've signed.
yeah, to that end, there are some really interesting things that, if they pan out and actually go to fruition, I think they could be helpful. I don't think that the end all and be all of mortgages or the industry at large, but I think they can be another valuable tool in the belt.
Yeah.
Which goes back to what I was saying earlier. There's no such thing as a bad product. There's just bad usage of it, and then so I think that's one of the things I'm looking forward to, and yeah, I'm noticing that there's a lot of momentum, if you will, in opening up certain types of income for underwriting purposes, up even on a conventional loan. Whether or not that takes or not, or what the time period is, I can't speak to that.
Yeah.
But in this economy, you have a lot of gig workers who you might have a teacher who would qualify, but now they're driving Uber at night to save up money or what have you.
Vacation money, who knows what. They're just building their fortune.
Yeah, but under current guidelines, you have to show 2 years of doing that before it can be counted.
Yeah, I do recall those things.
Yeah, but there certain lenders, certain investors are starting to look at it differently. And I think there's enough momentum around that to where even some of the GSEs are going to take note. And I've heard rumblings from within on them that they agree that it's a problem that needs to be addressed, but they're trying to figure out how to safely do.
Yep.
So
Totally
to
makes
that
sense.
point, I'm very interested to see where that will go, because I think that could help many more people without significant additional risk, I guess is the way I'll put it.
Yeah. To your point, if somebody's got some amount of time, it's all about like you've been doing commercial appraisal, it's all about the cap rate. It's, hey, for the known risk and maybe for the unknown, what is the acceptable return you're willing to take? And I'm sure there's people out there that'll lend some money. They're like, I don't need 2 years. I'll do it for a year, but you're going to pay a much higher interest rate. But if you really want it, then you'll pay it.
Those do exist actually currently, but with the proliferation, it's going to put downward pressure on it, because when you're the only game in town, you can charge whatever you want. But
Exactly.
As that downward pressure starts coming from the proliferation of your offering, competitive forces are going to push that down. And
Absolutely.
get the rates more in line with your Fannie, your Freddie. Is it there yet? No, it's not. But it's trending that way, and if the GSEs make that adjustment, that actually, saying this out loud, that's going to wipe out that product line from the niche lenders.
That's true.
Move it into the mainstream, which they can still do it, but they're not going to be able to get the same ROI on that.
Yeah, the premium's going to go down. I mean, the risk premium will compress.
Exactly. And right now, you're seeing another area. I'm seeing a lot of margin compression, I guess is the phrase I'll use.
Yeah.
Something that a couple of years ago was a novel thing, but the DSCR loans.
Oh, absolutely. Yeah, that's changed immensely since I first started investing in buildings like 2.5 decades ago.
Yeah. With DSCR, it seems like everybody and their brother has one now,
Yes.
and it's different. It's a different permutation, this and that. Some will do it at a bit under one now, which is I find a little dubious, but whatever.
I agree.
Any which way, this is happening because you're seeing compression,
Yes.
lack of a term.
Totally agree. Totally agree. Fascinating stuff, Ed. I appreciate you taking some time and giving us a little view from another side of the world, coming over on the side of the fence.
That's my pleasure. I enjoy this sort of stuff.
Definitely appreciate that. It's good stuff. Friends, as we had suggested, there are lots of opportunities to learn and grow and gain some insight into more than what we do, no matter what we do. And I appreciate our Perusing's alumni recommending Ed, and I appreciate Ed taking this time coming joining us, because everybody has a role in here, and the more we can understand and appreciate each other, the more we can work together. But more than that, as you've talked about, Ed, make some changes, maybe some positive and significantly impactful changes, as opposed to just keep doing the same old. And look forward to some of those improvements landing on these shores, as you talk about, that might be in other parts of the world right now. Hopefully. And again, thank you so much. Really appreciate you joining us. All right, man. That was fun and easy. Nice job.
I appreciate it, man. You know, that was. I appreciate the conversational
approach
podcast versus the. I've been on some real stinkers before.
Oh, they suck. I avoid most of them. Hey, would you be on my podcast? I'm like, no, not interested.
Yeah, it is. Yeah. So I do a fair number of podcasts for the MBA.
Oh yeah, yeah.
They're educational. They cover a lot of useful information, but God, are they boring?
Oh, they're terrible.
It's yeah, man, happy to do it. Let me know when this will be posted so I can get my marketing team behind it as well.
We will. So our follow-up, what we just changed this year is within a couple days, you'll get an email that says, hey, here's about when we think this is going to be in the next couple weeks. And then a full, I believe we haven't set up like a full week in advance. Like you get hey, here's what's coming and here's some guide. And then like, hey, here's a image. I don't know if we get the video yet, like in advance. And then, hey, it's going to go live on this Wednesday. So we're trying to, and Ed, I would appreciate feedback. You're like, hey, Michael, that was helpful the way you set that up. Or Michael, this didn't work very well. Or it'd be nice to have this kind. Any feedback you can offer to help us improve would be fantastic.
Yeah, like I said, for my part, this is one of the more enjoyable podcasts I've been on in recent years. So it's
excellent.
Yeah, it's like I said, it's the conversational ones are so much better. It's especially when I didn't prepare an agenda. I didn't have an agenda that I was going off of. So just sitting there, going where it takes us. And I appreciate that much more than coming through. You have to hit these speaking points.
Oh, those suck. You're like, okay, let me just read the teleprompter and check the box. You're like,
No. Which is why if I'm going to do something like that, I'd prefer to speak at a conference, because at least then I can feed off the crowd and put people on the spot.
Absolutely.
What do you think about that?
Yeah, totally agree with you on that one. Put them on the spot. That's exactly the key.
So
you at least have some interactions with people more than anything else.
So I've been playing in bands since I was like 15.
So you totally get the energy of the crowd.
Yes, I'd rather play to 5,000 people than to 5, because the 5 people, you can see on their face that maybe they're just to do you a favor, maybe they're bored. one of these guys over. Whereas 5,000 people, you almost don't see it as people anymore. You see it as a crowd, which is
Absolutely.
a lot easier. Whereas, so I definitely prefer the live audience. What we are doing is more of an acquired taste, if you will.
Yeah, I would agree. It took me time to get to learn this kind of stuff.
Yeah.
Wasn't exactly like I was very good at it.
Well, I'm not sure. I think like a lot of things, nobody starts off good at it. It's just doing it.
Absolutely. Completely agree with you on that one. Ed, you have a great Friday, buddy.
You too, man.
I'll catch you later. I'm looking at. I'm gonna get some lunch, and then I have to. I have to coach basketball tonight.
Now you go coach some basketball, and I'm with you. I'm gonna go get some lunch. So we'll have a good one.
All right, take it easy, man.
Thanks, buddy. Bye-bye.
Thanks for listening to this week's episode of Appraisers, Appraisers on Purpose. We hope you enjoyed learning from the amazing professional paths and achievements of our beloved guests. Before we go, please subscribe on your listening channel, Spotify, LinkedIn, YouTube, and other podcast channels to hear more from appraisers and valuers regarding their life and their work. After you drop a comment below, who is one friend and peer you can generously share this episode with? If you have any suggestions or questions for future episodes, we'd love to hear from you. Just send us a message on LinkedIn and we'll be sure to get back to you. Thanks again for listening, and until we're together again for the next session of Appraisers on Purpose, create the change that you seek.